Yeah, so today is 26th of November 2023. I've been planning this class since July 2023, and I'm so glad that it's a success because we had one yesterday and we've got a lot of audience on that. And looking at today's zone, we're also going to proceed. So without further ado, let's get started. And now I have 56 minutes left, so you can see, guys. Let me start sharing my screen. Start dropping your questions, guys. Start asking your questions. Okay, so I'll wait for 1 minute, just 1 minute. This is 8:05. Once it's 8:06, I'm going to proceed. So 1 minute, I want to take all questions, forex related questions. You can ask me about my trading journey, ask me about anything. I'll just wait for 1 minute. Unmute yourself and speak, or you can raise up your hands. Okay, I'm waiting. This is 8:05 and we have 10 seconds left. All right, so this is 8:06 and I'm going to proceed into today's content. Okay, I think everyone is satisfied with whatever we've spoke about yesterday, or whatever they are going through, you understand. So liquidity, somebody asked me one day, and somebody said, what is liquidity? And I said, liquidity is money, right? Liquidity is money. And wherever there is money, there is attention. Yes, if someone drives a Bugatti past you, you get attracted to the car. There is attention. So same thing in the forex markets. Wherever there's liquidity, remember, there is money, and wherever there is money, there is attention. Now, liquidity is an area in the market whereby there is massive or influx of buyers and sellers. There's influx of buyers or sellers. Now, let me, as always, I always love to draw my artificial charts. Then now this is liquidity in the ranging markets, and also there's also liquidity in the trending markets. But so how is the liquidity here first? Let me show you the liquidity in trending markets. So this is trending markets, right? Yeah, so let me show you where liquidity is. Now, what did I say liquidity is? Liquidity is money, and money is where there is attention or attraction. Now, there's a lot of sellers here, right? There's liquidity here. So what is the idea around this liquidity? With smart money concepts, we believe that once there's liquidity somewhere, price would want to take, or the market makers, don't let me use price, let me say the market makers. Market makers might want to take out all the sales over here, right, before moving in the initial sell direction, right? So what does this mean? It means price is going to hit stop loss of everyone here, because literally most people are putting stop loss here. Those that are inside a sell trade, probably your stop loss is here or your stop loss is here. And once price hits your stop loss, what happens? There is what's liquidity grab, and then you've lost the trade, but the market makers have eventually moved in your direction. So that is liquidity for you. That's liquidity grab for you. So that is how liquidity works. But to catch the liquidity with the market makers, there's a way to do that, right? I'll explain it shortly. This is for the ranging markets. Then for the trending markets, there is liquidity everywhere, every areas, right? There's liquidity here, there's liquidity here. But here, the case is a little bit different. The case is a little bit different, because over here, there's sells and then there's buys. But now there's no liquidity grab here. This is when we are going to be using liquidity as take profits. We believe that price should run over the liquidity area, right, and not grab liquidity, because it's an area of significant liquidity, but not an area that price might grab liquidity from. You understand? So we always use this kind of areas as take profits areas. So this is another liquidity zone. This is another liquidity zone. Liquidity is here. There's an aggressive buy here, aggressive sells here, aggressive buy here. So every buy and sell points in the markets, there is always liquidity. So this is it for the ranging markets, and this is the trending markets. Okay, so I'm going to explain it a little bit in the ranging markets because I love to see it more in the ranging markets, and I really don't use this trending market since it's just something of take profits and so on and so forth. So now but when you go to the chart, you see it mostly in ranging markets, right? You see it mostly in trending markets, sorry. You see it mostly in trending markets, and it's always very nice. Now, let me see. Okay, somebody has a question for me. Do you trade with 25? If yes, shed more light. So I trade volatility 75. Let me quickly open it. Okay, so volatility indices has loaded. I won't be explaining any analysis here. I just want to go straight to the points. Now, I trade volatility 75 and some other pairs, but not all. Remember, like I explained something yesterday. These volatility indices, you must look for the one that work for your strategy. So volatility indices is a simulated markets, right? If I say something simulated, it means it is mimicking the attitude of something. That means it is mimicking the attitude of forex markets. That means it is trying to move like the forex market, but it is not controlled by the forex market, and it is only controlled, or it is created by some some big boys. When we call some people big boys, I believe you understand what that means. By very rich and successful traders who put pool of money together to create something that is simulating the forex market. So for volatility indices, you have to know the strategy that works for you, and how, because not all strategies works on volatility indices. So you have to pick one that works with your strategy, and then you are good to go. Also, you should know that it doesn't close because it's not controlled by the forex markets. Monday, Tuesday, Wednesday, Thursday, Friday, Saturday, Sunday, the market is always open. So I think I've shed more light on that a little bit as you want me to. Okay, so remember, we'll look for a strategy that works. Forex markets, I think all strategies work on forex markets, right? On all the currency pairs, but volatility is a little bit crazy. Let me put it that way. Some strategies might work on some pairs, some might not work on some pairs. It might work effectively on some pairs, so it's left to you to identify and decipher which pair. Like I told you, I'm giving you this expo. Divergence works well on crash and boom. Divergence works well on crash and boom. I told you guys yesterday. So back to the liquidity aspects. Now, how do you join the big banks in trading liquidity or in grabbing liquidity? It is always with the use of demand and supply zones. You can use other things to catch liquidity grab with the big banks, but it's always nice to use demand or supply zones. Now, right, this is a liquidity zone, right? This is a liquidity zone, and you know that there's a lot of stop loss here. There's a lot of stop loss here, and you already know that, okay, this is a supply zone. I believe everyone knows how to draw a supply zone. This is a supply zone, and that is where you'll be using as your point of interest. That's why we call it point of interest. Okay. So that is the supply zone, this is the liquidity, and this is the liquidity grab. You can see. So this is cleaner now. Instead of putting a trade here with low probability setup, it's always good to put it on the supply zone. And these are the kind of supply zones we call high probability setups. High probability supply zones. So it's always very important to note all these things. Okay, you must open your eyes to see the liquidity, because if you can't see the liquidity, you become the liquidity. That is how it is. So now let's look at this supply zone. Let's look at the supply zone, right? Now, where is liquidity here? Liquidity can be in form of trend line also, like this, right? But I don't really like the one of trend line, because for me, I see it as the use of divergence. Because when you come with the trend line now, you see this is the first touch, third touch, second touch, then third touch will be what? Divergence. So I always like the liquidity of straight line liquidity like this. Support and resistance kind of liquidity. Yes. So I love this kind of liquidity. But this one has become divergence already. Remember the divergence entry I taught you guys. And I also love when liquidity is nearer. So I won't take this, all these ones are liquidity. Because sometimes you will notice that I spotted liquidity, but liquidity is not working out. What's going on? This liquidity is not working out. That's because sometimes it might not even be so valid, because it's just far away from the point of interest. You understand? It's too far away. I would love to see my liquidity somewhere here. You can see. So it's always better when it's nearer. You understand? Is when it's nearer. When it's nearer, it's always reasonable. You understand? So that is what I love to see. And let me go back a little bit. Yeah, so I always like it when it is something like this, right? This is a break of structure. So for demand 2 is the same thing. Break of structure. Break of structure above. This is the demand zone. You can see this is beautiful, right? This is demand zone, right? So if you look at this, where is this? You can see here. There's liquidity there. You can see. So that is very beautiful, right? Exactly what I was talking about. So with this one, this is a high probability demand zone. You don't even need to stress yourself on any stuffs. You can see these are beautiful high probability trade setups, and there are also ways to look for high probability trade setups without even looking at liquidity, because I don't use liquidity, but this is just for the purpose of everyone, so everyone is going to be able to learn something and take home something. Okay, so that is just as simple as it is. We can still continue and continue looking for more examples. Let me use this one, but this one is not that clean. Okay. You can see this is like the support kind of liquidity, but this one didn't touch the demand zone, right? Only if you want to just force the market. Okay, let's check. Okay, this is correct. Now this is another one again, so we can just continue going, and this is high probability setups. Remember, don't forget that you also have to check with the trend too. Don't forget, market trend is important. You check the market trend, check whatever you want to do, and then you strike. It's always very nice. Like, you get beautiful and clean setups. Okay, I'm coming. Okay, I thought someone was trying to ask a question. How do you use liquidity with inducements? So liquidity with inducements, liquidity too can also mean inducement, but it is not inducement. Inducement is when let me go back to my diagram. Oh, and I saw like inducements the other time. So inducement is when you have a supply zone, right? And there's almost a touch of that supply zone, and the price runs away. Then this is liquidity, right? This is liquidity. So liquidity has given you more confirmation, right? Inducement has also given you more confirmation. Then you use both as your strong confirmation. So this is the inducement. Inducement is when the price fakes a tap into the zone we are looking at. You can see it almost tapped the zone, but it didn't tap the zone. So that is inducement. They are fooling you to think that they want to sell. They are fooling you to think that they want to sell. Then they come back to sell. So that is inducement. Then you can use liquidity too, right? When you can see. So you can use inducement and liquidity as your confirmation of this supply zone as a strong and valid supply zone. You understand? So it's very clean, just like this one. Something like this, right? So this is inducement, right? Almost touched it. Almost touched the supply zone. That's like a fake touch. Then it sold. See how it sold massively. Then it came back to touch it, and that's when I striked. That's when I striked. See, it was a crazy sale, right? A very beautiful sale, 90 pips. So that inducement, you can use inducement too as your, you know, confirmation for trades. Okay. So let me see if there's something like inducement here. Okay, there's no inducement here. Aha, this is inducement, right? There is also like a fake touch. This one, so you can say this is inducement, but I like it when it is nearer to the point of interest. Let it be nearer, like this one. You can see it's nearer to the point of interest. That is the inducement. You can see it's inducements. So I always like it when it's near, like this, not like this, like when it's nearer to the point of interest, just like this one. Yeah, when it's nearer to the point of interest. Okay, so it's always nice like that. I was looking at something here before. Okay, I caught a beautiful sale here too. There's a beautiful sale I caught here. Let me look at it again. Aha, something like this. Okay, this is a supply zone, and this is the inducement, right? That is the inducement, but this one didn't, price didn't come back to, okay, price didn't come back to touch it, you understand? But that is the idea. That is the idea. Let me move to another pair. Let's go to Euro USD. Let's go to Euro USD and look at more beautiful setups. Okay, oh my god, there's a lot of questions for me and I didn't even realize. How can I find my entries? I'm trying to understand it. Now, for the entries, let's say you've used it's, remember what I explained yesterday? I explained order flow yesterday. You can use order flow to find your entries, right? But if you don't want to use order flow, you can use, let's say this is a 1 hour demand zone, right? You've found out that, okay, this is a 1 hour demand zone. You found the inducement. Let's assume this is an inducement, right? That's literally all you need to look for. But let's say you want to be sure that this place is going to hold, because for me, I'll just do my, remember I told you yesterday I always look for key levels. I told you yesterday I use key levels, but for, let's say for this example now, to be the best way to find an entry is to come back here, let this demand zone give you a new demand zone, and use that demand zone as your entry. Okay, so let's this demand zone, okay, let that demand zone give you a new demand zone. That is how you pick your entry. Now you pick your entry from this new demand zone. So that is literally what I explained yesterday on order flow. That is if you were paying attention. So, but can you do structure mapping, and how do you notice a finished trend? I love this question. Now, you really cannot know when a trend is going to finish. That is just it. See, let me tell you something about forex markets. You don't need to stress yourself that, hey, when is the trend going to end? When is the trend going to begin? When am I going to do this? Just follow the structure. Follow whatever you are saying. Okay, you are seeing a demand zone and you want to buy here, but your analysis is telling you to buy. Okay, follow your analysis, let it flow. Once it hits your stop loss, or once it didn't go in your direction, or once it didn't give you the order flow entry confirmation and price starts selling, price has definitely shifted structure, because now we've hit this supply zone, to be honest, and price could start selling from there. So it's all left to you not to stress yourself that where is the market going. Nobody knows where the market is going, because nobody works in the forex markets. So it's not left to you to start saying, let me start looking for where markets will react, this and that. Just follow what you have. Follow what you have, and trust me, you are good to go. So that is how I map my own structure. That is how I map structure. And that is how I notice that, okay, this trend is about to finish. Because once I do my analysis and this buy is not playing out, then I know that, okay, if price should break out from here, if I get a breakout from here, I already know that price wants to shift buyers to the bearish side. Then I start looking at, and that is just it. You understand? That is just literally how I do my things. You understand? So I think I've answered my question well on that. That is literally how I move with the price action. You understand? I don't force myself. I don't force the markets. Okay, and I don't stress myself on how to notice a moving trend, like a buying or selling trend. Ooh. How do you find the valid demand zone, and how does it work with price action? Demand zone itself is price action, and how do I find a valid demand zone? Now, finding a valid demand zone, there are several factors for finding valid demand zone, but for me, the only criteria for looking for a valid supply zone is there must be a break of structure. That is it. Demand or supply zone. Once I see a break of structure, the demand zone is valid, right or wrong. Then it's now left to the demand zone if it is going to hold or if it is not going to hold. You understand? But once I spot a break of structure, let me delete all this that I have here. Once I spot a valid break of structure, right? Once I spot a valid break of structure, then my demand zone is valid already. You understand? That is how I know my valid demand zone. So already this is a valid demand zone. Then once the demand zone is formed, then I can start looking for inducement and liquidity to give me strong confirmation that this demand zone is valid. But trust me, you don't need all those. But that is just criteria for saying that this demand zone is valid. You understand? And another thing is, if you have 3 demand zones like this, it's always nice to use the one that is what at the lowest price, because you want to buy low and sell high. So you want to use the most extreme supply zone, just like this one. So that is another way. You understand? You don't want to use the ones that are at high prices. You want to trade buy at low prices. That is just it. How do you know the best demand and supply zone? I think I just explained that. There is no way to know something that is the best, and I told you it's all points down to your trading strategy. For me, my trading strategy allows me to see the best demand and supply zone with the use of key levels. I told you guys yesterday. But there's no best way to say, okay, this is the best demand zone, this is the best supply zone. Okay, there are only criteria for checking out that this is going to be a good supply zone. For example, the inducements, okay, and for example, liquidity. Okay, those are the 2 ways. Liquidity. So these are good ways to identify valid demand zones, and that is what I was trying to teach you guys earlier, right? Inducement, liquidity, especially liquidity. Liquidity is even more active than inducement because most people don't tend to see these inducements. But liquidity, this is a very good way to spot a good demand zone. You understand? Because you know that price would want to react from that demand zone with the liquidity. You understand? So that is a very good way to spot a good demand zone. And somebody says, How do I mark demand and supply zones? Trust me, I don't stress myself on how I mark demand and supply zones. It's the simple way. Once I spot a break of structure, just like this one, this is a supply zone already. That is how I mark my supply and demand zone. As simple as this. Simplicity is king. I told you guys in the forex. I told you guys in the forex market, simplicity is king. Then it's now left to me to say, do I want to take this trade or not, depending on whatever markets presents at this point. Because I don't want to enter immediately, I want to now use a confirmation entry. You understand? So there's no way actually to point and say this demand zone is the best, this demand zone is not the best. You might say this demand zone is a low probability demand zone and to give you 200 pips, and you can say this demand zone is a high probability demand zone and to give you just 50 pips. So which one is high probability, which one is low probability? Is it still the one that gave you the 200 pips or the one that gave you the 50 pips? You understand? So there is no rule, there's no specific rule that says this is a high probability, but there are ways to say, okay, this is a high probability, like inducements and liquidity. But there are sometimes you might not even see inducement and liquidity, but the demand zone is going to hold. You understand? Like this now, there's inducement here, right? There's inducement here. This is the inducement, right? And after the inducement and liquidity, that doesn't mean that demand zone should play out. It's not a specific rule or a die-hard or by force rule that says price must respect inducement. You understand? So this is liquidity here, this is inducement here, and price is already reacting from there already, and that is very nice. I hope my question has been answered. I hope my question has been answered.
Boss.
Yeah.
Okay. What's the Sorry, I have to ask again because I think I'm noticing like the word inducement now. I think I'm learning to dwell on the first time. But from what I'm seeing and based on your description, it seems like it's a popular word that people use retest, like when a level is being retested. Then also, when you mean liquidity levels, like what do you mean by liquidity level? Is it area of consolidations? So those are my two questions.
Okay, so to get your two questions correctly, the first question says, let me check the time we have. We have 29 minutes left. So your first question says, what is inducement? Inducement is when price tries to touch a supply or demand zone first, fooling you to think that it has already been mitigated, but price has not touched it. Okay, so it is more like a confirmation that that supply zone is a valid supply zone. If the market makers want to fool you to taking trade into that supply zone, then that means that supply zone is a valid supply zone. That is inducement. So that is what happened here, right? Price created the supply zone here. Price almost touched the supply zone, and now price is now fully touching the supply zone. That is inducement. Inducing sellers into this point, thinking that the price has already sold, allowing them to sell and forget that price will still come back to sell. So that is literally what inducement means. And your second question says, what does liquidity level means? Liquidity level are just basically support and resistance levels in the markets where there's a lot of reactions, right? There's a lot of reactions. And we believe that with smart money, once there's a lot of reactions like that, a lot of stop losses will be at this point, right? And then market makers are seeing those stop losses and are planning to take out those stop losses to make a lot of money from the stop losses. So with the idea of that, we always use the supply zone that is above the liquidity, so that we also join the market makers in grabbing the stop losses. You understand? So instead of us selling at the resistance, we sell at the supply. You understand? So that is liquidity for you, and that is um, that is that is liquidity for you, and that is inducement for you. So okay, and somebody says, what is, do I use fair value gap? I don't use fair value gap. Fair value gaps are like, what do we call it? Imbalance, but I don't use it because, like I told you guys, I don't use all those fancy words. Liquidity, inducements, this and that. I don't use all those. But I'm just teaching you guys that if you want to, because some people might find it hard to note that a supply zone will be active or valid. So if you want to choose a valid supply zone, that is why I'm teaching you inducement and liquidity. So I don't use fair value gaps, but I know what it is. What's the difference between liquidity and consolidation? Liquidity, I love this question. Once you see a consolidation, there's going to be liquidity. But the difference is that liquidity generates money. Consolidation generates liquidity, and liquidity generates the money. So consolidation creates liquidity, then the liquidity is what gives you the money. So there is really no difference, but wherever there's consolidation in the market, most of the time there's liquidity there. You understand? But consolidation means a range. Don't get confused. Don't say there's consolidation and liquidity are the same thing, please. Don't ever go out and say consolidation and liquidity are the same things. Consolidation only creates liquidity, and liquidity creates money. Consolidation means when market is ranging from upside to downside, and it is not moving in a one direction, just like this. Okay, that is consolidation. Whereas liquidity is when there is a influx or massive amount of sellers, or massive amount or influx of what? Of buyers. Okay, caused by the consolidation. So consolidation is what creates liquidity. Don't forget. So can I mention my entries? What are my entries? Jesus Christ. I told you guys yesterday. You guys think I'm joking. I told you guys my entries are demand and supply zones. But I use key levels to identify the demand and supply zones that are going to work. That is why I'm teaching you guys the demand zones and supply zones that are active with the use of liquidity and inducements. If I can't answer everybody's question and we still have enough time, trust me, I will send another link. So can I show you my entries? I just showed you my entries, guys. I showed you my entry yesterday on GBP USD. Is this person joking? I've showed you guys my entry. Demand and supply is very simple. I trade very simple. I trade very simple. Trust me. I don't stress. This is a demand zone. I was explaining order flow yesterday, and I entered here. I entered price here. I entered the trade here. My stop loss was around 20 pips. I entered the trade here. My target was 100 pips, and I held it true because I saw the order flow here, but this was my entry, sniper entry. I don't waste time. I was expecting price to give me 100 pips immediately, but I saw 70 pips immediately. Then I held. Why I held was that when I saw order flow, I could have entered here again, but I didn't enter. So this is my entry, demand and supply. I'll show you my entry again, and I don't hide stuffs, but I might actually hide how I get my key levels. You understand? But my entry is demand and supply. That is just it. Let me go to USDJPY. I took a lot of. Okay, let me go to EuroCard. No, I took like 400 pips on EuroCard. Yeah, let's go to EuroCard. I love EuroCard so much. I took the whole sale on EuroCard. I caught the whole sale. I was very proud. It was a very good moment for me. Though the entry was very rough, but when you see it, you can't unsee it. Right? So this is it here. This is the supply zone. My key level was showing me that there's a supply zone that is going to form around here. So what did I do? Now, this is where there is confusion. Where is the break of structure here? Because I was planning to sell from here, right? My key level was here. Now, I use the supply zone, right, I use that as the break of structure, right? Let me show you guys how I always enter the market, so that somebody will not come and ask and say, I didn't show you guys my entry. I didn't show you my entry. So this is a break of structure, right? Then what does that mean? There's a supply zone here. There's a supply zone here. But literally, there's still a high here, right? That high might also be a supply zone, right? It might also be a supply zone. Now, if I want to take this trade from this supply zone, remember what I just said. I don't use inducements. You remember? So I'm just teaching you guys for, for understanding sake. Now, I was looking at if I should take a sell here, then that means my stop loss will have to be somewhere here, right? That'll be around 60 pips. And I was like, what do I do? Because my strategy was telling me that price would soon sell off. Price would soon sell off. and key level, my key level was already showing me something nice. And I was like, okay, what do I do? My stop loss has to be here, and my supply zone is here. What do I do? Then I said, okay, let me use this as the supply zone since it is the last candle. Though it didn't give me a break of structure, right? But I have a supply zone that has given me a break of structure. Cool. Then my supply zone is above, my stop loss is above. Then I can still use this candle as my supply zone, right? I can still use this candle as my supply zone because now I've gotten a supply zone. Stop loss is here, but this candle is also a small candle. Then all I did was I refined it down to here. So from 60 pips, I had 38 pips. In fact, with this 38 pips, I was not, um, I should not enter, I was not planning to enter the trade, or what's the word that I would use now? I didn't like to enter the trade, you understand? Because 38 pips is not even my, it's not my thing, but I was like, no, this thing is showing me that price is going to sell. Price,
Did you necessarily have to wait for the price to retest the that demand that supply
the
zone,
extreme
or
supply zone. Yes, because,
you waited for for the price action to like hit the zone and
y-
reverse twice
yes,
as well
so
before going back to the trade?
yes, I have to wait for this one because look at it. If I said I should have entered, I would have also profited. But look at it, 60 pips is too much. So I'd look for a way to. If I had missed it, it would have been painful. But I think it'll still be fine, right? And then that was what even made me hold the trade more because it gave me. Then another drop came again, bruh. It just dropped. I remember I held it for like 400 pips. I held it till the last. I had 400 pips. It was not even to the last because it did price it 500. So I held to like 400, and I stopped there. I stopped there because it was a very beautiful trade, and I held more because of the stop loss. I was like, no, I won't use 38 pips stop loss and gain 100 pips. I must gain more because my target is 100 pips. All my setups, my target is 100 pips only on Euro JPY where I trade a little bit differently. So this is my entry. This is how I enter. And sometimes markets would not stress you. Let's go to USD JPY. I'm showing you guys my entry now. I'm trying to look at the time because once it's 9 o'clock, I also have class with my students. Uh, so let's go to USD JPY, right? I took some beautiful buy trades on USD JPY. That gave me like 200, 300 pips also. Let's go back a little bit. I can't really see it now, but I'm trying to check. The tool is not more there, so it's a little bit hard. Okay, it is this one. Found it. Now look at this. Very, very simple and effective. Crazy, right? Now this was my key level. My key level was here. Price was telling me that a buy is going to occur. And what did I do? I look for a demand zone, right? Where is the demand zone? I found out that this was a high, right? There was a breakout of this high. As simple as that. Breakout above. That was the break of structure. And then I used my normal entry zone, entry criteria. I use the open because I don't like to use the midpoints in case I'll miss a trade. Stop loss 15 to 20 pips. Take profits 100 pips. But this one, I think this one is 200 pips. I took 200 pips here. Sharp. Because USGPY is quite heavy. Right? I took 180 pips here. Because this is where I closed. I remember this spike. This is why I closed. Because when I saw this spike, I was thinking to continue spiking down. Immediately it's spiked up a little bit. I closed immediately. So that's just literally it's simple as that. Effective, right? Break of structure, the demand zone, wait for the retest, boom, as simple as that. So that is my entry. I believe some questions would be more again. So premium and discount levels, let me go back a little bit to the top. Understanding that inducement is sketchy, kindly throw more lights on it. Like I said, inducements, let me use my um, dummy charts. Inducement is when there's a supply zone and price tries to tap that supply zone, but not tapping the supply zone, fooling you to sell and then coming back to mitigate the supply zone. Okay, so same thing for demand also. Demand zone, when there's a demand zone, right? This is a demand zone. Then price tries to tap into the demand zone, but not tapping into the demand zone, buys off a little bit and then comes back to the demand zone to buy. Okay, so this is it, right? Price tries to touch the demand zone. Tries to touch the demand zone here, but didn't touch the demand zone. Fooled you to think that it has bought but came back to buy. So that is literally how it is. Don't worry, you get the recording where I explained very well. So can you mention your entries? Okay, I'll explain my entries. Uh, can you explain premium and discounts and what are those key levels? My key levels are my spikes. Okay, my key levels are my spikes. It's just levels. What are key levels? Key levels are zones that price reacts from immediately, like this. There's a key level here, right? There's a spike. There's a key level there. So that is key level. And premium and discounts. Premium is when it's just the same thing. Discounts is when you are buying low, right? And premium is when you are selling high, just like demand and supply. Okay, so there is demand zone here, there's demand zone here, and there's demand zone here, right? We have 3 demand zones, but which one is at the discount price? Discount means lowest price, right? Which one is at the discount? It's definitely this one because it's at the lowest price. So you eliminate this demand zone and this demand zone, and you use what? This discount demand zone. That is the meaning of discount. And let me explain premium. So same thing here too. You have a supply zone, you have a supply zone, you have a supply zone. Okay, you have, let's say you have 3 supply zones. Okay, uh, then you can say, okay, I want to sell at premium, right? Because I want to sell at the highest price. Then you ignore this supply zone and ignore this supply zone. So this is the premium supply zone. I believe I'm clear on that. You are just buying low and selling high. And same thing in the chart too. If you see 3 or 4 demand zone or supply zone, use the one at the premium or you use the one at the discount. Very simple. I have 15 minutes left. Oh my god, this is getting interesting. So what are those key levels? I've told you key levels. Key levels are levels in the markets that price reacts to sharply. Key levels, key levels, key levels. So somebody says, how much will I pay for your mentorship, or is this free? My mentorship is not free. My mentorship is 100 USD. I think people have been asking me about my mentorship, right? People have been asking me, or is it the same person that asked me? I don't know, but I think like I've gotten like 3 questions on my mentorship. So my mentorship is 100 USD. So that is just literally it. I have few minutes left. I have 14 minutes left. And by 9 p.m. I'm having a class with my students. So any more questions? Any more questions? Okay, so somebody raised a hand. Somebody raised a hand. I'm with you, Mr. Jekko or Mrs. Jekko. Ouch. On mentorship, can one get a physical class? All my mentorship is online. You get everything you want to do online, and that is how I work. Because even me myself, I'm not always available physically. So okay, someone is trying to talk. I can hear you.
I got one question.
Uh,
Like,
okay,
I'm newbie in CMC,
okay,
and I'm trying to understand some key level setups, but I see many videos, many PDFs, so I can gather it together
okay, I
so
understand.
that I can study it as well. And I recently used some strategy like BTMM, but I found it boring, so I just switched
Okay,
to SMC and
okay.
so that I can learn more as well.
Oh, that's nice. And how is SMC treating you?
It's stressing me like founding some entries because I just like to know like 3 entries, but I found it hard for me because I just studied alone.
Yeah, that is something I always tell my students because if you try to start forex trading as a newbie with SMC, it's always quite confusing. So it's always like that. Okay, they said someone should off their mic. Okay, so that is SMC for you because Once you start trading SMC, and that is why I'm fully not trading SMC. Like I said, I use key levels, and my key levels are not coming from point of SMC, or it's just normal retail how to identify a key level. Then I use my demand and supply, because when you're trading SMC, you have to look at a number of things. Okay, I still have 12 minutes. That's nice. And how many minutes have I recorded? Jesus Christ, I've recorded 45 minutes. I think that's the fastest 45 minutes of my life, because it felt like 1 minute. So, as I was explaining, you SMC means smart money concepts. Smart money concepts, you look at the concept of liquidity, you look at the concept of imbalance, you look at the concept of inducements, you look at the concept of fair value gaps, you look at the concept of order blocks, you look at the concept of look at the concept of order flow. You understand? So it might be confusing. It might be confusing. And I told my students that, because I noticed that with SMC you have lots of lessons. That is what I realized. And I'm like, I don't want to stress my students with lots of lessons. Let's just do something simple. Let's pick one. Let's pick demand and supply. And let's pick key levels. Let's combine them together. Let's see how they work. Don't let us put a lot of knowledge too much in our brain, because lots of knowledge sometimes might not have advantage, because what if all the knowledge you've been gaining in all these days is even wrong knowledge? Then you've wasted your whole time. But trust me, I've traded SMC, I've traded retail, I've been, like I told you guys yesterday, I've been in forex market for long. I've seen a lot of things, I've used a lot of strategies, and SMC is good, but you have to learn a lot of things. Just like this man said, you just have to learn a lot of things just to be able to catch a particular move in the forex market. And if you don't catch that move, it's going to disturb your psychology at that point, because you might be thinking, what's made me lose this trade, right? And you'll be looking at all your inducements, imbalance, order blocks, order flow, liquidity, and so on and so forth, and you might not find the one that will give you a valid reason for losing a trade, right? But if you're just using something so simple and you hit a stop loss, you already know why you hit the stop loss. You already know what you did that you hit the stop loss. So that is the way it is, right? You love SMC, that is fine. I also love SMC, because SMC, I'm still using SMC. I got my demand and supply from SMC. You understand? But I'm using it in a simplified format now, instead of stress, because I don't like stress personally. In forex market, the main aim is just to withdraw, right? The main aim is to withdraw. So I use SMC, and I combine it with something very simple to avoid stress, and it is very beautiful, right? It has been very beautiful. But that doesn't mean I've not been using my SMC knowledge, because like that GBP USD trade I took, I use my SMC knowledge on order flow to confirm that trade, and there are some other trades that I'll take that I'll use inducements also to confirm the trade. So that is how it has always been for me. You understand? I'll just want to take a trade, and I'm like, okay, let's see, and then if it plays out, fine. You understand? So that is literally how it is. Okay, so that is just it. Any more questions? I see now that people have been asking about my mentorship. I think I'll drop information on that tomorrow. Okay. Somebody says flip zone. Now you can see, now you have to learn about flip zone too. So flip zone is literally a demand zone turned a supply zone, like this. How do flip zones work? So it's just like breakout and retests. To me, it's just like breakout and retests. Honestly, you can see that this SMC concept is already a retail concept, because it's just breakout and retest. So this is flip zone, right? A demand zone is meant to work out. It didn't work out. Then it's oh my god, my alarm has gone off. In 5 minutes I'll be having another class. So this is literally a flip zone. The demand zone is meant to play out. They didn't play out and turn to a supply zone. That is just what a flip zone is. But I really don't use flip zone to trade, because it's like breakout and retests. Okay, I also trade breakout and retest. I trade it very well, and it's part of what I do, especially on Euro JPY, right? If you look at my Euro JPY trade, I have some beautiful trading setups over here. that are just literally breakout and retest, but there are also ways I trade it. It's a very beautiful strategy I found out by myself and shared with my students too. Because anything I learn, yeah, like breaker block, breaker block. Should I say breaker block? Breaker block. What is breaker block? I really don't use those terms. Sorry. So you have learned something. I have a lot of PDFs. I have written 5 PDFs, so I have a lot of PDFs. 2 are paid, and I've
How can we get access to your PDFs?
um ah I'll send all my PDFs to the group apart from the paid ones. One is divergence, right? I've given out divergence for free, so I'm not sending it again because it's not free. But I'll share all my paid. I'll share all my free ebooks. That is on other blog. That is on SMC, and I think I have one on retail, and I have one on risk management. I think that's very important, risk management. So I have 6 minutes left. Okay, I still have 6 minutes to talk. So that is it. That is how you can. I'll send my PDF probably today. So then tomorrow, if some have read it, then they can use it to ask questions again.
But the ones that are not free, the ones that I don't know if they I think they are paid for. What's the criteria to get them?
Yeah, since it's paid, you just have to pay to get it. You understand? That is just literally how it is. That is divergence. But I think I've been giving divergence for free. So if you don't have it for free, then you have to pay for it. But I might still give it for free. I don't even know. But I don't think I'm giving it for free. I've tried on that. Then somebody says he has learned something new. I'm glad you did. I'm going to open the. Somebody said didn't see my last PDF. Then that means you didn't request for it. If you request for it, I gave you that. Share the group link. You get the PDF. Some people share the group link. They got the PDF. And I don't know if they're in this call. Thousands of people got the PDF. Not thousands, but a lot of people got the PDF. Divergence. I don't know if they are here, but a lot of people got the PDF. So if you didn't see my last PDF, that means you didn't do the task and you didn't. Okay, somebody says you got exactly. So when you have someone, sorry, that's opportunity has gone because I said share the group link. I was shouting, share. I even posted it to the group millions of times. Share the group link. Share the group link. You get the PDF, a paid PDF for that matter. But I was just trying to make sure there's a lot of people in the group that would attend this class. That's why I was giving out my paid. Uh, yes, somebody says got the divergence and it's helping a lot. Divergence is king. Divergence is king. I told you guys there's nothing I'll teach my people or my students or those that are learning from me and you won't gain one something or the other. Divergence is king. Divergence is king. So I'll share my free ebooks, not TDI divergence. All these indicator people have started. Not just pure divergence, just trend line, just pure trend line, just pure trend line. So my system is low right now. This is bad. I would love to use this link to old class of my students, but some people still join again. Some people still join again. But then I think that will be all for now. You get the recording.